Hello, I'm Brian Roten, Senior Reporter for Hotel News Now. I'm here with Jesper Palmqvist, the Area Director for Asia Pacific for STR. Jesper, thanks so much for being with us again.
Thank you, Brian. Good to see you.
Good seeing you. So, not the usual host for this. I'm filling in for my news editor Sean McCracken. He's out at a conference this week, but I did my research. I listened to the last episode that you guys had, and the topic of the conversation that start off with was pessimism about the APAC region, and I want to find out in the month or so that has passed since you and Sean talked. Is the mood the same? Has anything changed? What can you tell us?
Well, thanks for that. And obviously, I would assume that you're interested in Aussie rules football is the same for
Yeah,
the end of this chat.
my preferred team is not doing quite so well as the Swans, but
Who and remind me that was?
yeah, the Adelaide Crows. I picked
Oh,
it mainly
Crows.
because
Okay,
I like the name Adelaide, and I think crows are cool.
both are very good, and
Best way to pick a team, right?
it is. And Adelaide is obviously the main office for CoStar in Australia.
Well, there
So
you
it's
go.
great, and it's a beautiful oval that they have, and really good. Yeah, that's good. So listen to your question. I think if you just believe the data,
Hmm.
May was better than April. The short
Okay.
answer is that April was kind of sprung out both from a top line and a bottom line, and again macro level in the largest region in the world, so ups and downs within it for sure. But May bounced back, and as we keep saying this year, finally this region, for the overwhelming majority, we can talk year over year. We don't have to. It's nice sometimes to find a historic benchmark, but most things are year over year and month over month last year, and May was in many of these places showing progress both in growth on top line, but also on some of the margins that got hit in GOP in April. So overall, a better month.
Obviously, it varies by country, but can you share with us some highlights as to what drove better performance for May compared to April?
Yeah, sure. I think demand is a pretty easy question because we know that occupancies are slow burn and gaining where it can. The last 3, 4, 5% in a lot of those countries that has already happened out west. That's coming slowly, etc. With the flights, with the groups, with the international business in Australia's case, like in some of that, it's close by. Some are ahead of historic levels, but so that's the less reactive and easy one, unless you're, say, Vietnam or something that is growing a lot year to date because it was different last year. It is still the rates that makes that difference, because you'll have markets where you got India and Japan and Hong Kong. The rate growth hasn't really slowed down. In those markets, it keeps going in a lot of these big cities too, and then you'll find Sydney and Singapore just after that below. So when we talked about China, but in the last couple of months, that's one of the few markets where rates are declining. But so this growth will come at the back of more of those countries that bring the whole value up with rate growth increasing. And we kind of feel that that's a first half of the year thing for most of those countries. We expect Q3 to start to slow down in some of those markets too. One market where we still forecast that rate growth to keep going to some degree is Tokyo, right? Because we're not seeing any of the exchange rate shifts just yet, and with the airlift being affordable to Japan, and Tokyo is still pushing pretty hard, for sure.
Yeah, what you said reminded me of something that some of the brand CEOs were talking about at the recent conference at NYU, talking about interest in further building out in India and how it has been a challenging market for them to get into, but they absolutely see the potential there, and they compared it to the amount of work they had to put into developing in China at first and how they're seeing it pay off now. So I'm just curious your thoughts then on the future
Mm,
of development within India, which I mean, calling India a
yeah,
market is I mean it's a gigantic country.
it is. It's like China, I suppose. If you The similarities are not that many, but one of them is, of course, that it's a domestic market market, and first and foremost, and it is massive with so many nuances and facets, but also that it is a pretty new market in terms of hospitality maturity, in terms of the business model and the variation within it. And after that, it's a lot of things are different. And it's true that when international, well, I mean, in China, the first international brand hotel, what Holiday Inn, I could be wrong here, 83 or something in Beijing, right? So there was history of some hotels coming in, but the hotel spectrum in China before the year 2000 was, domestic groups and a few international where foreigners stayed. And it wasn't until then the big boom, right, where Home Inn and Huazhu and all those groups have started. Thousand hotels later, but in India, of course, you have a history and a legacy. There's a huge difference of great hospitality companies domestically, right? Of the Indian hotel companies, so with Taj and Oberoi and all those guys, right? The new ones that came later, Lemon Tree. So there was obviously that before, but the gap was always there in what the rest of the world, and the US included, that upper mid-scale select service. And particularly where the growing middle class can spend more money, as the Indian economy is growing very quickly. And they're not going to be happy with staying in an unsecure, unsafe little, whatever, in a third tier market. So huge opportunities. I totally get that the brands see it and they do have to put in a lot of work. But what has changed in the last 10, 15 years, where to the better, is that you used to need, 59 different permits just to talk about opening a hotel. And now the whole process of developing and hotels and operating has become easier. Is it amazing yet or fluent as it's not going to know, but it's a lot better. So I think that's where people see the opportunity. And we heard comments like, well, it's not the same scale because India could be opening, 5,000 hotels. But I don't mind that the pace is what it is now. And look, India stands out for us when we look at where, if we remove China from the equation, because the numbers are just bigger, right, in terms of pipeline, India is the number one under construction elsewhere in Asia Pacific. So it's bigger than Indonesia, it's bigger than Australia and in Japan, right? So last time I looked in June here, we had 27% of in construction was in India, outside China. So that's a big tell that something is happening. But if you compare it to rooms, just for reference, it's Vietnam because there's a lot of bigger resorts. So it tells you which kind of properties are opening in these markets too.
Before we started recording, we were talking a bit about the volatility of looking at the numbers going from April to May. As you look over the regions, as you look over the countries, where do you expect to see further volatility, and where are you expecting to see either the start of stabilization or further stabilization?
Yeah, I think we expect the ones that are in that stable position, I would say, like Australia and Singapore, and that we forecast that that's just for 25 is going to be, and the rest of 24 and 25 just slow in growth, and they find its pace with that risk of the cost, because labor costs, particularly because utility is kind of eased on pressure and some other costs, but labor is still that one factor that keeps popping up and creates some EBITDA impact to hotels for sure. But in those markets, it's less likely to happen drastically. There's always been a long period of learning that. And then you have all these markets that came a little bit later. I mentioned there Vietnam, in Southeast Asia. And we have other markets. There's regions within India and China. Obviously, you talk about China. I think that's a stabilization that needs to happen in tier 1 cities where they're under the rate pressure at the moment. And the other type of it is, of course, in Japan, where the rates, we talk about that a bit, that the domestic traveler to some degree is being priced out if you travel in yen. So that also needs to set back. I mean, when you hear the Japanese government talking about 60 million arrivals, which, by the way, they did say loosely before the pandemic as well as a long-term goal. So we shouldn't really freak out about it when they talk 30, 40, and eventually 60 million. Japan has great infrastructure, but having 60 million arrivals and what that does to a country, that's kind of a new ballgame. We don't know. So I think things like that, those big numbers that we see will stabilize. And I suppose it's when I was looking at what business on the books are in key destinations around the region. Is it the same pace as last year? More and more markets find themselves in the middle. Yeah, it's similar to last year's pace. And as long as it is that, we know that lead times are shorter, booking windows shorter overall in the region. So if you're a little bit behind, you'll catch some of it up. But you have the markets that are still ahead, way ahead of last year, would be some of those Chinese markets, a little bit of Jakarta. So it's kind of closing in on that stability there compared to what we saw in the books last year.
One thing that we hear all the time on earnings calls, and we know earnings season is coming up again as we come up on the end of June here. We're closing up on the second quarter. Just a lot of talk about what's going on in China in terms of the domestic travel. Last time you and Sean spoke a bit about what's been going on there in terms of domestic demand, the holidays that are big for travel. A month is not necessarily a lot of time, but has there been much change or things basically on pace from April in terms of the amount of domestic and potentially outbound travel from China?
Yeah, I would say, yeah, the trend continues, and it's not hyper in pace, but the trends are the same, as in rate sensitivity in key markets, also, but an increase in demand and for these new leisure destinations that Chinese domestically have been promoted. Xinjiang in the west and northeast of China and other like particular markets that are upgraded tourism destinations domestically. So they're growing as well. I mean, the pipeline is still there, and I think it's going to be interesting for us to start looking more at the delivery dates of those hotels. But if I look at the numbers, May versus April and how that's trending, it's still those big key markets, rate pressure is there. We're starting to, okay, because again, it's not many countries in the world where you see or markets where rates dropping, right? We keep saying our rates generally will hold because was it maybe underpriced for the past decade before COVID? In a lot of markets, it was compound about 0 or 1% growth with inflation means a decline in a way. So I think we continue to see how some of those big markets are looking at rates. So, and the same thing with the real estate, right? So we know the government is looking at ways to ease that burden, right? If it's state-owned enterprise taking in from another, and the government's taking the real estate, so the apartments that are empty or need to be finished, the hundreds of thousands of flats that are sitting awaiting or on the debt. So there are still solutions, and that feels like that's not going to be done in a couple of months. This is a long-term thing that happens, right? And meanwhile, we're being told that no, GDP numbers as they were in the two sessions in March, these are still intact, etc. So we'll just have to see how that pans out. But no major changes in that. But I suppose that's as those trends continue, it can either exacerbate or accelerate the challenge, no? And at the same time, one point that I make more than compared to last is that rate sensitivity, if that's domestic, I think most people agree, then it's likely that such rate sensitivity will carry in the overseas travel, right? So when people say, when are they coming back? Well, Chinese are coming back. We're getting more flights every week going everywhere. But again, Singapore is the only market out of the top 10 traditional markets that have more airlift pre-19. US is minus 70% now compared to 19. India still doesn't have a direct flight between China and big feeder markets are still 20-25% behind. Luxury stands by itself. Luxury will do okay. But all these new FIT travelers, because it's not just the flag waving groups, those FIT travelers will, start to look a little bit more and price conscious, I think, possibly as well, which adds to that layer of the outbound from China.
As you and your team are, working with your contacts in the industry around the region, I'm curious to hear, what are you hearing? What kind of feedback are you getting, you and your team members from owners, from operators, folks in the brands? What are they excited about? What are they still worried about?
One of the being a cynic, but one of the concerns and the worries. It's more fun to talk about the. Now, listen, if we start on that side, is we talked a lot about, say, 2-3 quarters ago about, hang on, make sure, and we kept saying 24 is not 23, right? That phenomenal growth that was great last year, you're not going to see the same if you're a multi-location property owner or developer, right? Um, and what I'm hearing is there are some brands and there are some where that conversation between owner and operator didn't end in that happy place. So like, absolutely, it'd be different, and we write it down so that there is some that are saying, you know what, I expected more from this year, and we're like, well, maybe you shouldn't, because there's going to be some contraction in markets. So there are some uncomfortable conversations happening, which is interesting as we now enter budgeting for 25, and a lot of
Hmm.
hotels are talking about it. So obviously the guidance and advice is going to be interesting there. We keep saying, if you thought it was tightening for this year, all things point to a tightening, even if interest rates eventually will drop and evaluations of assets is something, but just
Hmm.
pure performance. And that's even when this hump of new pipeline delivery is gone, right? So we're entering 25, 26 going to be lower years in delivery. So I think, yeah, some tightness there. And I think there's not a risk, but I think there's a very important point between owners and operators. And that's at the same time as in the next 6 months, and what's already happened in the last year, this continued, I suppose, like we white label has been a good topic in the last 6 months. Obviously, as you know, not a big thing in this part of the world
Hmm.
until now. So there is definite new companies that are seeing the benefit of it and gaining traction, and can see what a successful business model it's been in Europe and the US.
Hmm.
So that's definitely a trend. I mean, you could look at it the way that it gives owners a bigger palette to different options to choose from, professional outfits like that. So I think that's something really to follow, and something I definitely hear more in those conversations. People also worry about the airlift again, and I don't know, obviously in the conference a few weeks ago in the Middle East with the ADA, profitability of Asia Pacific Airlines isn't great. You have a few exceptions, Singapore Airlines, Thai Airways, whatever, but a lot of them it's low profitability. Rates are not going to drop, but the same way hotels had it, rates didn't really grow much in that decade pre-COVID. Air rates, their fares were, you know, quite stagnant, and it didn't grow much. So people obviously worry because a lot of these destinations, think about Philippines. What is it? I can't remember. I was there last week, but 90 or 80%, a huge percentage of their inbound, it obviously has to come, almost everything has to come through airlift. A lot of these are islands.
Hmm.
Singapore, yes, we can drive over to Malaysia and take some boats, but the majority is airlift. We're so dependent on these markets on airlift. So I get that that's a hot topic as well, for sure.
It's interesting about the white label management, as you mentioned. That obviously here in the U.S. it's big and it's growing even further. Uh, it's growing in popularity in Europe, so it's interesting to see where else that's going to. For the white label, third party management companies in the Asia Pacific. Granted, very large region, but do you have an idea of how many are like domestically grown, or how many are international companies starting to operate there?
I think we're all waiting on the latter, like waiting on company X and Y from the West to come in. Maybe that's more talk of that. It's more. I mean, Australia is one of the more, if in that aspect, the mature market. Obviously, a mix of franchise and
Hmm.
obviously has its own setup as well, with a lot of strata title and that kind of stuff that's happening, and a lot of brands. So Australia is seeing more influence around it. I think the conversation and the conference have been there. We've heard more about it. We hear more in Southeast Asia now as well around it. I think that's interesting. I'd be something I definitely need to check more on how that conversation, and if it's picking up in China or not. I mean, in China, the difference is that you have some of them very successful joint ventures between domestic brands and international brands that are growing, and that's something I looked at a few weeks ago. What's the difference? Which brands? So if you take all the Western big hotel groups, the top 10 hotel groups, which brands are they growing around the world? And you have that list. And the brands that they have that they grow in China, that's almost entirely different. So I find that interesting, right? So they're purposefully, in that joint venture, in that arena, the other brands are growing. with one exception, the classics, the 100-year-old brands like your Hilton, your Ramada, and Holiday Inn, right? But
Mm.
everywhere else, it's going to be it's the Hilton Two Suites, or whatever it's called, that one, but not outside China, right? So that's an interesting distinction in there, and how they're growing it.
Well, we are coming up on our time here, but Jesper,
Hmm.
is there any final thoughts that you wanted to share about the past month, or things that you expect to be coming up before we close out?
I've been reminding people of the value. We've seen a lot of exchange rates. I mean, you're a dollarized traveler. I don't know where you've been if you've been outside the country, but it's interesting. Even if you take someone who travels with a pound, the euro, or the dollar, one thing I kind of good news, because I didn't do that earlier, but one of the upsides is that a lot of Asian currencies have been weaker, which not just the Japanese yen, which means that you still carry value, right? Instead of saying, oh, you're a cheap destination. No one likes to hear that. But
Hmm.
they are affordable enough on exchange rate. So then obviously flights is a different matter. But I think that's been something that we're seeing. That's the Maldives for some countries. I mean, for Russians, it's 40% more expensive, but for some others, it's, for British, it's the same price as 19, kind of like Singapore, Bangkok, Bali. Bali's booming, as before, for 12 months now, done really well with the Australians coming back. So there's definitely some good spots and some good, in terms of investment. The hot markets are still the hot markets. Everyone wants to buy in Australia and Japan and Singapore and Thailand, etc. So that's kind of still the same. But the last thing is that people look at the source markets on, and kind of, they're not the same. And that's not easy, because you can drill deep down in a rabbit hole and look at source markets and planes and everything, but you can't really control it until the flight schedules come out and see. So it is something that we track as much as we can and look at it. So that's important.
Well, Jesper, thanks so much for taking the time to speak with us today, and thank all of you for listening. Stick with Hotel News Now for further coverage.
Hi, I'm Isaac Colazo, Vice President of Analytics at STR.
Hi, and I'm Jan Freitag, National Director for Hospitality Analytics for the CoStar Group. Tune in to our new show, Tell Me More, a hospitality data podcast.
It's a podcast on the global hotel industry, its current trends, what we're thinking about, and where the industry's going.
And we like to have fun with the data too. Find us on hotelnewsnow.com or wherever you listen to podcasts. Subscribe today.
This episode of the Hotel News Now podcast network was recorded on June 26, 2024 by Brian Roten and edited by Rachel Dobb. Look for this and more at hotelnewsnow.com.